Bismillahirrahmanirrahim. Thank you everyone for joining today, and we really appreciate you took out your time to listen to us. Just as of my background, a brief background about myself. I believe my voice is clear. If anyone of you cannot hear me properly, you can always prompt during the seminar. Just to give you a brief background about myself, I started my career around 25 years ago from PricewaterhouseCoopers. I was in the consulting department and thereafter worked with a lot of sovereign wealth funds in the GCC countries, Saudi Arabia, Qatar, Oman. Now I have got my own consulting firm where I advise on restructuring and strategy and investments to different sovereign wealth funds in UAE, Qatar, Oman, and Saudi, and some large family offices. To allow over a period of last 20 years, basically, I've been working on different complex restructuring projects. So I thought that I should be sharing some of my views with my participants. By education, I'm a chartered accountant from Pakistan and a management accountant from UK and US. And I was done my master's in economics, plus my master's in Islamic finance from Malaysia. So today I'll be sharing, this is not a theoretical seminar. And as you know, this is an introductory session. A much larger version of this will be followed in the next coming days. So today what we are going to do, we are going to give you an intro of what restructuring, transformation, turnaround is all about, so that it gives you a glimpse of what we are going to discuss in our full-fledged seminar. We'll be discussing the case studies from the international markets, some of the leading case studies and what actually they did. And I will also be discussing some of the, giving you a brief example of some of the projects in restructuring and turnaround that I've done myself. So around 20 to 30 projects I've done myself as well. So with my hands-on experience of what we have done, I'll be sharing those experiences as well. So Bismillah. So basically, this is Wiseman is my firm, consulting firm. Taif is the platform. The Taif Digital Institute, one of the leading digital learning platforms in the entire Minasa region. And we are jointly doing this thing. Today's session is about corporate restructuring and turnaround. And as we said, this is the introductory session for the full session that we are going to do afterwards. This is an agenda overview that what we are going to briefly discuss today. And what are we going to discuss in the full seminar? So part one is fundamentals of corporate restructuring. That why do companies need restructuring and turnaround? What are the initial phases? How do we identify the needs that the companies need some sort of transformation work? Secondly is the business remodeling, which I believe that, and based on my own experience, which is the most critical component that those companies which are in distress or in a loss situation for a very long time, they need to fundamentally review their businesses. Part three is the financial restructuring, which includes the equity, debt, capital restructuring, the balance sheet and P&L restructuring. Then we are going to talk about the organization and the operational part, what kind of cultural changes are required by the organization, how can we handle them? And of course, last part is going to be the change management and whatever plan that we have made, what kind of challenges we are going to have during the process, what kind of risk we are going to have during the process, and how are we going to manage it. So step one, basically, it is very important that whenever we are talking about the restructuring and turnaround, there are three terminologies which we always come across, which is restructuring, turnaround, and transformation. And all these things are overlapped or they are used interchangeably. But to be very precise, it is very important that whenever we are doing any internal or external project of restructuring, that we are very clear that what are we trying to achieve. So basically, the objective or outcome of the assignment determines that are we going to do the restructuring or turnaround or transformation. So normally, what happens that restructuring, the word restructuring, when we use, it reflects that there is something wrong with the organization. There could be financial restructuring, means that the company is having losses or you're having debt overcomes. Operation restructuring means that somehow the organization's operations are not working properly. Or the business model restructuring means that the way that you are doing business, the business model is no more relevant for people. The word turnaround normally is used that whenever we are having a loss-type situation, loss-like situation, and when we want to turn the company's fortunes into a profitable one, into a green one. And transformation is a very broad terminology that we are having. It could be a digital transformation. It could be a financial transformation. Basically, transformation means that the way the companies broadly operate, we are going to change the way company is working. Now, what determines basically restructuring, turnaround, or transformation type situation is your targeted outcome, first of all. That what are you trying to achieve? Whenever we are handling any such project, first thing that we have to determine that the owners or the shareholders of the company are trying to sell the company, they want to continue the company, or they want to contain the losses. The objective is to go into IPO. What's the company is trying to achieve actually? The second thing, the second aspect, what determines basically the restructuring, turnaround, transformation thing is the duration of the assignment. Like for example, if we have got a patient, always give this example that the companies which are in distress, they're like patients and we are like doctors. So for example, if you've got a patient in front of you, then and you are given 1 week to I was to save the life or to turn around the health of that patient, then you are going to act in a different manner. If you are given, for example, 1 month or 1 year, then you are going to act in a very different manner. I'll give you a live example. I recently concluded a project in one of the GCC countries in which we gave board 3 options that whether you want to immediately sell or close the company, or you want to run the company in the short term and basically then you want to resell, or you will be running the company in the long run. So what happens basically that whenever we are targeting any company, a similar company with a similar set of problems, the duration matters. The duration tells you that what kind of a strategy, what kind of steps which can be taken to fix the situation. And this is something very practical. This is not theoretical. Then, of course, becomes the focus area. Focus area determines that how are we going to determine or develop the actual pain addressing measures. You know what happens actually, in practically speaking, whenever you are going into any corporate distress situation, it is not like that every company has everything going bad. There's certain specific areas of every company which have got problem. Okay. As a result of it, first of all, we need to identify those pain points, those areas where the company needs fixing, and then we identify then we devise a plan that okay, these kind of measures can be taken by for this company. And of course, once we have done the diagnosis, then we have to determine that what kind of restructuring needs to be done. It could be a business remodeling, financial restructuring, or organization restructuring. So this is a broad framework that as soon as you enter a room, you enter a situation that yes, you want to do something, you want to fix a corporate, then these are the 4 or 5 things that you have to look and identify initially. Before I go into more detail, let me discuss a case study, and we are going to discuss this case study in more detail. This is of Legoland, basically. Lego, we all know, children love it. The company was founded in 1932. In 1968, they opened their first theme park, and then they started expanding. But over a period of time, what happened basically that the company had started having losses. The losses were having because the company had expanded too much. They had diversified too much. There was an over expansion, and the company was unable to manage the expansion of that part. As a result, what happened that the company was having a very high operating cost. Just imagine basically when we talk about diversification. Previously, I was talking about business remodeling. So if you look at the diversification part, the Lego ventured into the media and the fashion, and only the losses from the media industry, they had $37 million of losses. Then they had very high operating costs. So as a result of it, in early 2000, the company started realizing that we need to fix ourselves. We need to take measures which would, otherwise we are going to go bankrupt. We are going to go bad. As a result of it, what happened, what restructuring strategy did, they said they sold their company to Merlin Entertainments, basically 70% for a certain amount of money. The reason was the Merlin, you could maintain the theme parks very well. Now, what are the implications of managing the theme parks? What are the costs involved? What are I would say, the differentiation between the fixed cost and the operating cost, what we call the OpCo-PropCo model? All these things we are going to discuss in more detail when we do the whole course. The outcome was basically, the company returned to profitability, the brand was revived, the company started expanding again, and the buying company went into the IPO. Why is it that? Why they were successful as an IPO? Again, these are the things basically we are going to discuss. The next thing, what are the key lessons? We have to focus on our core competencies. It has to be a very data-driven sort of an experience. They implemented a lot of AI measures. The company improved a lot of operational efficiency and strategic expansion. And, the quality of, I would say, the location or the assets where they wanted to expand, that also improved significantly in the coming years. So, these are the things that we are going to discuss. And throughout the course, what we are going to do, we are going to discuss around 20 to 25 case studies along with the key points, or I would say the bullet points or the key themes. But everything is going to be supplemented by the real-time case studies that we are going to discuss. 20, 25 case studies we are going to do in the main course, which will be like 4 to 5 case studies for every module that we have, which will give you a very practical idea. And this is one case study which was done globally, but we are going to discuss case studies basically, which I did myself. As a result of it, those of you who are interested in doing any project for your company yourself, whether you're a consultant or your company has given you the additional responsibility of fixing. So, during the conversation, during the Q&A session, you can always ask the questions. You will have some of our free advice during the Q&A session of the practical problems that you are having yourself. This is the kind of restructuring that we do, the business remodeling, technology transformation, governance, and legal restructuring. All these things we are going to discuss in more detail in the course. All these things, go side by side. Most of the time what happens, as we say, and as we looked at in the Lego case as well, that is not that company is doing only one kind of restructuring. If you look at all these kind of restructuring, when Lego was restructuring themselves, they did the business remodeling, they did the governance, they did divested some assets, they did the financial restructuring, and of course, they did the technology restructuring as well. What happens that whenever a company is trying to fix itself, whenever a company is trying to fix itself, basically, it's not only one thing, it's a combination of measures which need to be undertaken. And that we saw briefly in the Legoland case. And when we are discussing in more detail the Lego case, I will tell you that what kind of business remodeling measures were taken by the company, what kind of financial restructuring was done, what kind of governance and operational restructuring they did. Just coming to, this was a very big case, but there are some companies which are family-owned businesses. My family-owned businesses need restructuring, and what kind of things they need to be done. Most important thing is that the family-owned businesses, they grow over time. So, one of the forefathers started the business, then the business keeps growing and growing. And what happened comes a point that the second or third generation is running the business. So what needs to be done is carry out a strategic review from a restructuring perspective. So in the main course, we are going to discuss in detail that what strategic reviews are. And whenever you are doing a strategic review from a restructuring perspective, so what needs to be done? What needs to be looked at? One of the brother, Abdul Qadir, is raising the hand. If you could just note down your point, my friend, and I'll be addressing all the questions at the end of the session. Just note down the slide number or the question that you have, and inshallah, we'll be addressing at the end. We'll have a detailed Q&A session at the end of the session, and you can always talk to me on that. That's not an issue. So basically, otherwise, it's we're going to lose the momentum. The most important thing is that, as I talked about the strategic review, the second most important thing is to create an early warning, early intervention mechanism. You see this thing, early warning, early intervention mechanism. Now, this is again very important, that sooner you identify or diagnose the problem, sooner you start taking the steps, better it is for you. If you keep delaying it and delaying it and delaying it, then the problems keep getting worse. It becomes so complex at one point in time that it becomes virtually impossible. The banks are after your neck, shareholders are creating a lot of troubles, and there are different type of problems at the operation levels. You start losing key employees, etc., etc. So what happened that whenever we are doing a restructuring process, it's not only that, I would say the corrective restructuring, what we call preventive restructuring, that what can be done in advance. So for that, we need to identify the key indicators. How do we do that? Again, this is something we are going to discuss in more detail in the course. Now, these are some of the initial, I would say, early warning systems or indicators that we have. It could be lack of segment analysis, it could be leveraging, it could be increasing market competition. So these are some of the indicators that we have that could indicate that a company might need a restructuring. Again, we are going to discuss more detail in the main course. Now, this is another case study of Fuji versus Kodak Corporation. Fuji, if you could say the Kodak was an American company. Was an American company, actually. They started in 1975, and they were the first company to invent a digital camera. Fuji almost came in the same time. They started in cameras, but soon Fuji realized, and by the 1990s and 2000, that the digital revolution was basically making the film industry or the camera industry relevant. So what happened at a very early stage, they redefined their business model. They went into a diversification strategy. They started investing in the healthcare, cosmetics, and pharmaceuticals, and that too in a very precise manner. So what happens that whenever you are doing the business remodeling, it's not like that on one day you are going east and the next day you start going west. It's not like that. You have to very clearly identify and develop a business remodeling and diversification strategy that how can this be achieved. Second thing is that what happened due to these diversification measures, Kodak, they started doing a lot of things, but they were too late. Today, what happens that the Kodak filed for bankruptcy in 2012, while the Fuji films, today they're a global conglomerate with a revenue of around $20 billion. So you can imagine that just by virtue of diagnosing their problems at the right time, Fuji was able to diversify and grow into a multinational conglomerate, while Kodak was unable to do. Now, all these changes happened over a period of 30, 40 years. The next case study, which we are going to discuss in more detail in our course, is going to be the Coursera. Everybody knows Coursera, a lot of courses. But during last 10 years, Coursera has redefined their business model at least 10 times. At least 10 times. They've been reinventing, redefining the revenue model, the business model. How do they make money? How do they define products and services? And this is something, a journey of Coursera from zero to the IPO, that how Coursera created a lot of value, so much value up to the IPO. So we are going to discuss the Coursera study in a lot of detail, that what they did, how they kept redefining the business model in our main course. Business remodeling now become, as we have spoken, business remodeling, the process of fundamentally redefining what are you trying to do, what are we trying to achieve, in the sense of, I would say, whether it could be a revenue model, it could be a cost model, it could be an organization model, but it has to be some fundamental redesign of how do you operate your business. What are the main trends? As you know, today we have got the tariff scenario. Today we have got trade wars and chips wars. We have got supply chain things as well. And all these things we are going to discuss in detail, that basically how the tariffs are forcing the companies. Like there's something called China plus one strategy. We are going to discuss in detail the China plus one strategy, that how the companies are trying to diversify and dealing their supply chains from China. Then we are going to discuss how AI revolution is basically transforming the business model of the company. There are so many global trends, which are the wars, basically the pandemic, is the processes which started during the pandemic. Then there's a skill gap, human resource challenges creating a lot of problems for the companies as well. So these are some of the major trends which are impacting every company and which are forcing every company to redefine their business model. How do we do the analysis, the assessment of, I would say, the business remodeling? We have to determine what is the strategic position, that how people perceive what is your market position today, and how are you going to be seen 5 years or 10 years down the road. We need supply chain consolidation. Then we have got human resource. So each and every metrics, basically, we have to determine and assess the company, that how company is going to behave. Again, one of our main case studies that we are going to do is going to be Netflix case study. Netflix basically has evolved from a DVD rental company to a global streaming powerhouse. But it didn't happen over a period of one day. During last 25 to 30 years, the Netflix has been reinventing itself every few years. Every few years, Netflix, and we will discuss that what is the precise journey of Netflix, each and every step. And one more company which came into market at the same time, which was a competitor of Netflix, which used to be called Blockbuster. And in 1990s, in 2000s, they had a revenue of $6 billion and 9,000 stores and 84,000 employees, and the company went bankrupt. So we need to understand that what are the factors, what are the things which Netflix did right and Blockbuster didn't do right, and what are the reasons due to which Blockbuster went bankrupt. What happens that whenever we are doing restructuring and this is not a theoretical seminar, or we're not just trying to teach theory. We all are senior people trying to learn a lot of things. What happens that you need to understand what are the companies which have been successful, which have sustained over a long period of time, and which are the companies which could not sustain because they could not reinvent themselves at the right time. So this is something we are going to discuss. Business modeling process, we need to do a lot of soul searching, planning. We have to set a strategic direction. And then we have to embed the change, and how the change actually happens. What we call business black holes. What are the business black holes? How do we define the fault lines? How we determine that? What kind of black holes that a company has? How are they created? How are they diagnosed? And how do we fix them? This is one of the projects that I did recently myself. One of the premium retail chains in GCC, the company had a top line of $10 million. And a gross margin of 30%, despite the fact the company was having a lot of problem in running. So when I got into it, now shareholders were shaky, they were about to close. So what we did basically for shareholders in that situation, we created an outcome analysis. What if happens if the companies close immediately? what we operate the company in the short term and sell, and what we operate the company in the medium term and sell. Basically, this option analysis, you need to understand that whenever you are faced with a situation, what are the possible outcomes, possible strategy, the duration, how can you fix those? Basically, I would say, how can you fix those situations? So this is something we are going to discuss more, and this is something that the project I led the project myself, did the project myself, and just recently completed it. So there'll be a lot of interesting insights. I'll be referring to it again in the financial restructuring as well. Because when I was looking at the company, we did the business, operational, financial, complete restructuring of the company, and the company is very much sustainable now. And during the discussion, we'll have some reflection sessions as well. As I mentioned over here, that what kind, and these reflection sessions will be a Q&A session sort of a thing, that once we have done a few things, then you can discuss, you can share your case studies, and we can talk about a few things. What are the trends analysis? Micro trend analysis is an important thing. What are the short-term trends? What are the structural trends? What are the seasonal trends? And what kind of corporate response do we need for every kind of trends? Because everything has a different kind of an impact on the business. Basically, what are the major challenges when the companies are trying to fix their house? We have to discuss whether it's the technology challenge or the HR challenge or the stakeholder management. This is something we are going to discuss, because what happened that, sometimes you make a great plan, but when you are, I would say, going to execute or implement, there are a lot of practical obstacles. So it's one by one, we have to overcome those obstacles. We have to implement these changes. We have to tell people that how are we going to manage things. This could be financial obstacles. It could be investor related problems. This could be fundraising issues. It could be bank related issues. But a lot of these things, of course, there are a few things which are out of our control. There are a lot of things which can be managed as well. Part 3 of our discussion is going to be financial restructuring, in which we are going to discuss in detail that what is the debt restructuring, which is mainly related to liabilities, the equity restructuring, what the company needs needs more equity raising, more money raising, etc. We need capital restructuring, which means the complete complete capital composition into debt and equity needs to be changed. Then we have got investment restructuring. We are going to talk about, from a financial perspective, the operational and performance enhancement measures. Is that if the company is not generating enough equity, enough returns, then what needs to be done? And of course, there are certain 4 situations in which the restructuring is done, either to I would say, to implement the bankruptcy or to finally avoid the bankruptcy. Now, when we are doing the financial restructuring as well, it's not like you just go and start implementing the measures. Most important thing is that you have to diagnose the core pain points, that where the company is having the problem. Like, for example, we need to do a loss analysis, that at what level the loss is happening. It could be a gross loss, it could be a operational loss, it could be an EBITDA based loss, it could be a net loss. And every loss at every level, the loss at every level indicates that there is something different. That there is the nature of the problem is different with the company. So, basically, loss is not like, okay, the company is making losses. No, at what level the loss is happening, we first determine that, and then we devise the strategy accordingly. Like, for example, the company is having a gross loss at the top level. It means there is something fundamentally wrong with the company's business model or pricing strategy or the product offering, so on and so forth. This is going to be a case study of SKS Microfinance, one of the largest microfinance banks from India. It was the first NBFI, non-banking financial institution, which was listed. The company was doing great. They had huge loss. They had great profits. And then the company ran into problems due to some political issues, some diversification-related issues all of a sudden. What were the reasons? We are going to discuss in detail. And, I've been involved in several microfinance and non-banking financial institution restructuring cases. Myself led those projects. So we'll also discuss what happened in India, what has happened in Pakistan, what has happened in the Middle East, why the non-banking finance companies run into trouble, especially they have got a lot of problems with the quality of assets. Why is it that? How can they manage their profitability while managing the quality of the asset portfolio? This is basically some of the things which the SKS Microfinance did. They changed their leadership. They did a strategic shift for their organization. They diversified their product portfolio. They did financial restructuring. As I was telling you, basically, that any organization which is going into restructuring, they need a combination of different measures which can basically get them out of trouble. It's not like only one thing that you talk about restructuring or you do things cosmetically, but there are things like, for example, on the product diversification side, they introduce new products from a microfinance perspective. It was insurance, pension, and a lot of other things. As a result of it, what happened that the company's reliance upon the micro loans to farmers was reduced. Similarly, from a financial restructuring, from a geographical diversification perspective, what the company did, at that point in time, their focus was mainly Andhra Pradesh province, which is one of the largest provinces in India. But due to some of the farmers' suicide and some of these issues, the company was having a problem. As a result of it, the company had to diversify geographically. But can every company diversify geographically? Every company does not have the luxury or capital for doing this thing. These are the typical issues with financial institutions, and we are going to discuss all these things in our main course in detail. That when we are any institution which is dealing with MSMEs, micro, small, and medium enterprises, then how do they address these technology, diversification, scalability, and profitability related challenges, especially when fintech is completely disrupting the industry. Recently, last year, a few months ago, I did one more project for a petrochemical waste company. And that company was basically being acquired by one of the largest sovereign wealth funds in one of the GCC countries. And we had to do a post-acquisition restructuring plans. So how do we diversify the revenue model and the geographical outreach, the assets and the investments, what kind of new investments we brought in? This is a very interesting case study, basically, that how a company which has a very good business model ran into a trouble. These are some of the, I would say, points related to what we call the financial architecture. It might be a bit complex for you, but again, I'm going to discuss in more detail, as I said, in the financial restructuring module, that what is the financial architecture, what kind of different models we can discuss, PropCo-OpCo model, what are the implications of the PropCo-OpCo model instead of a unified operating model. What are the investor expectations? What are the different type of investors? What we call the corporate investors and private investors, what we call the strategic investors, strategic business investors, strategic financial investor, and financial only investors. So basically what happens that whenever you are doing a restructuring, and for example, you are having your own business or a startup, and you are going to present your business to a certain investor, that what needs to be done actually, how can you create a business case which is right fit for that particular investor. Then segment analysis, again, very important thing. A lot of the times people think that you are doing the right segment analysis, but that is not the case. Segment analysis is a very critical area of restructuring process, that you identify that where the problem is actually happening in the company, I would say. This is the segment analysis thing. Sorry. Then basically, this is a case study about the RBS. Since we're talking about the financial institutions, so RBS is a very important case study, a very large-scale case study, that how the government of UK intervened to save RBS, what kind of measures were taken, how the bank was safeguarded. This is a recapitalization plan related stuff, that what do we mean by recapitalization, how the companies get recapitalized, how the investments happen, how we convert debt into equity, what are the convertible structures, what are the implications of the convertible structure compared to a plain vanilla structure, how do we create an investor readiness thing, how do we plan for IPOs, what is called IPO readiness. For example, if the company is going for an IPO 3 years down the road, then how do you need to turn around, restructure, make your company more profitable, or achieve some profit enhancement? So recapitalization is going to capture all those things. This is basically two projects that I did. That some of the time what happened that these are not the operational companies. What I would say that the companies which are at a planning stage, but the projects are not taking off. So what happens that we have to re-evaluate, restructure the financial planning. So these are the two projects which I did myself, that we completely redid the business plan and the financial plan of those companies. This area pertains to operational restructuring, which is supply chain, human resource organization structure, technology and automation and operating model. For example, these are the major trends in supply chain, which is the geographic diversification because of the trade wars and the chip wars. Then what's happening, what we call reshoring, onshoring, and nearshoring. Then how the supply chains are being analyzed, what is being done. Then tariff engineering, that for example, if tariffs are coming in a big manner, then how the companies are managing their tariffs, and what if the tariffs come back again? And what we got a strategic stockpiling, for example, like recently what the Apple did, that when there was not much clarity on the tariff, what they did, that 600 metric tons of iPhones were were taken from on flights, on cargo flights from China to US, so the price stability remains. So these are the different kind of measures which are being taken in the supply chain, because supply chain is one of the core focus areas. And you are in any industry, if you're a medium-sized industry and you're operating in any business segment, you will need a lot of supply chain restructuring in the coming days. This is a China case study, which is called the China Plus One case study, that how the global companies are managing their China thing. This is called China Plus One strategy, that those companies who are solely reliant upon China for their supply chain, how are they diversifying their China-related operations? The second case study is from Malaysia, that how Malaysia is positioning itself as a global hub in chips manufacturing. What are the kind of things they have done? What are the competitive advantages they are offering? What kind of incentives they are offering? Why the global companies are coming over there? During last 2 years, Malaysia has been able to raise $23 billion of foreign direct investment from global investors. Only Intel is investing $7 billion. So what is happening correctly? Why Intel is basically choosing Malaysia? What kind of supply chain restructuring is happening in Malaysia, that people are going to Malaysia these days? World Economic Forum says that from a human resource perspective, what we call the strategic workforce planning, 40% of the workforce are going to be reskilled. So there are a lot of initiatives for the skilling, upskilling, and reskilling of workforce. So how do we need to train our workforce for the future? How do they need to think differently? And one of the best examples in this regard is basically, I would say, Microsoft. We are going to do a detailed case study on Microsoft. That why Microsoft, which was going down in like something like 2014, it was a stagnant organization. The revenues were around $86 billion. How, when the new CEO Satya Nadella comes in, he changed the organization culture, and today from 86 to Microsoft is around $257 billion company. The share was $30 at that time. So today the Microsoft share is $300. So you can imagine that what kind of steps would have been taken by the new management, what kind of cultural change happened. As a result of it, Microsoft is such a big company now. This is something, the commoditization of AI. This is something which we are going to discuss in detail, that how is AI is going to be everywhere. We just had a glimpse of DeepSeek, which came up with a low-cost AI model. That model shows that AI is not only going to affect everything, but it is going to be available everywhere. It is going to be cheaply available everywhere. And anybody who misses the AI revolution, I would say that they are going to have problem in managing. What are the major challenges in AI adoption and automation? This is something we are going to discuss in our operational management, operational restructuring module. Then basically, this is a UK AI. This is the AI case study on UK, that when one of the large organizations tried to restructure their technology system based on AI, that what kind of problems happened, what kind of debacles and fiascos happened, how did they manage, what is the interaction between the human and the AI, what is the importance of data analysis and data analytics and data screening and inserting the right data, so that, because AI is basically an advanced version of data sciences, so how do they capture the right data? So this is a very interesting case study that even AI can go wrong. Last part of our discussion is going to be the change management and execution, monitoring of turnaround plans, that what kind of steps need to be taken. How do we create a roadmap of basically, I would say creating restructuring a company. What are the specific steps in terms of finance, business, technology? What kind of things need to be done? And because we need a complete roadmap. If you remember initially when we started the seminar, I mentioned something that the restructuring plan, one of the fundamental factors which define the restructuring plan of a company is the duration of the assignment. So that duration is very important, okay? Because that duration allows us to create a roadmap. If you have got 1 week, 1 month, 1 year, or 2 years, that allows us to come up with specific steps which need to be taken. So what are those steps that we are going to discuss? I just mentioned about the Microsoft's cultural transformation, which made company from a $86 billion revenue company to $250 billion, with a 10 times increase in the share price. The market cap has increased significantly more time. Stakeholders are different kind of a stakeholder, the investors and the regulators, the management, and so many other people. So, and every stakeholder needs to be onboarded. Their interests, their conflict of interest need to be, I would say, understood, managed properly. There has to be a communication mechanism from top down and bottom up. Everybody needs to understand each other, and everybody needs to be given that comfort that the objective of restructuring is not to create harm, cause harm to anybody. Restructuring has to be a win-win situation. Once once the whole thing is exercised, once the whole exercise gets completed, then it is going to be a win-win situation. It is going to be beneficial for all the stakeholders. How we do that, we are going to discuss that. And of course, this is a very important part of the discussion, the risk management. There are a lot of financial business modeling risk. How do we manage those risks? For example, we do product prototypes. We don't just like you are doing a technology transformation. So we have got a pilot project with you. So what kind of risk management tools need to be done from the HR side, from the supply chain side, from the financial side? How do we manage those risks? Like, for example, when you are trying to do, let me give an example. Like, for example, you're trying to do a debt restructuring. Then you go and tell the bank, you see the company is not doing well, so we are going to restructure the debt. Immediately, the bank, it is going to cause a red flag for the bank. But if we go and tell the bank that, okay, you see, the company were not doing well, but now we have put together a restructuring plan. These are the steps which have been taken. The board has approved these steps. We are going to put some more money into the company. And that's why we need your support. I'm just giving you a very broad example right now because these are the things that we normally do. But it's all about risk management. One of the fundamental factors of risk management is how do we communicate? How do we tell people that what are we going to try to achieve? Thank you so much for listening, for being here. Now we are going to start the Q&A session.
Jazakallah, thank you very much, Mr. Noman, for your time and for explaining everything, how this is going to be. So before we continue the question and answer session, I just want to quickly tell everybody about this course that is we are launching with Mr. Noman, and he have kindly agreed to do this specifically with Taif and portraying himself into the picture and trying to give us the best possible. We have tried to put him into a corner and ask him to do these courses with us. So if you come to Taif's website, you will see corporate trainings. Here you will see Dr. Brother Noman's course. Further, this course is over here. This will be the price of the course. All right. And this is what you can learn about the course. All this page, I'm sure my screen is visible. You can see further. These are the things that will be mentioned. Every detail is given over there. The webinar video will be available over here. After, I think, a couple of hours, after 2 hours or 3 hours, this video will be available over here for you to view. Presentation slides will not be shared. They're available in the video session, so you can see it from the video. This course will cover these modules. The modules are available over here, as mentioned by Brother Noman, how they will be covered and what are the things to be covered. So anything you need to know, you can look into that. Further looking into that, you can take a look at his profile and further see what is his achievements, what things he have done, and make your decisions if you are looking forward to transform your business and change your strategies towards success. Further, I'm sending this link to this chat as well. I will stop sharing my screen now. As a matter of fact, Mr. Noman, can you tell us the target audience, that who is this course for?
Basically, this course target audience, whether you're a businessman who is running your own show or you're working in the finance or planning department of any company, then you are one of our target audience. Basically, you will learn a lot because every company needs some sort of remodeling, restructuring. Then you could be one of the private equity venture capital professionals, one of the investment guys, and you are managing a portfolio of assets, then you are the guy. So whether you're into general management, you're into financial services, anybody who is dealing with businesses, investments, performance of the companies, or you are having a portfolio of your own investments, basically, this course is relevant for them. And of course, those who are into consulting business, even I did this seminar at a physical location in Karachi a few days ago. So we had people from Big Four as well attending this course, but they also need to train themselves in these domains. And this is a very niche domain, corporate restructuring. And there are very few people who are doing trainings. You can go and check on your web, on I would say on web as well, that there are hardly any courses available on corporate restructuring and turnaround. Very few people who are doing it, and especially those who have got a hands-on experience of doing this. And anyone, you have any more questions, you can email to Brother Hassan. We'll try to answer as many questions as we can, inshallah. And please try to join us for the course. And we look forward to welcoming you over there.
Jazakallah. Assalamu alaikum wa rahmatullah. Thank you everybody for joining the session.